Half an hour away from the opens of Hong Kong, Shenzhen, and Shanghai. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. Our top stories today: a muted start to trading for Asian stocks, oil dipping. You have investors assessing the limited progress from President Trump's summit with Vladimir Putin.
Volodymyr Zelenskiy and European allies now head to Washington for talks as Trump pressures Ukraine to accept a ceasefire deal by giving up territory to Russia.
Plus, we take a closer look at the growing divergence between the Chinese economy and its stock market, with shares gaining momentum despite gloomy economic data. Good Monday morning. Welcome to the program. A glance at equity markets, and certainly momentum on a weekly basis has been pointing up. We're holding trading near session highs, as you can see on the screens here, at least as far as the Nikkei goes here. We're trading near record highs on a global benchmark basis. The pull we're getting today, though, is we're coming out of Korea and right now, as you can see, out of Taiwan as well. So Asia Pacific within 3.5% of record highs. We're down, though, about 0.2% going into the Chinese Open today. Cross asset look, what are we watching? You're looking at Brent, oil prices, and energy shares in between on the back of these prospects of Donald Trump pulling back, at least his tariff threats, additional tariff threats on China related to Russia, their purchases of Russian oil. We can unpack that later on. Jackson Hole, of course, this week. Will the Fed chair effectively cement these expectations, or is there actually room to fade these bets coming through around the September meeting or cut September meeting? Dollar index right now is hovering in and around the key moving average right now. That comes ahead, of course, of Jackson Hole, and gold futures right now has been stuck in a very tight range of late, the last, let's call it 4 or 5 weeks or so. Right. Now, might be some distance from Friday, but certainly some stocks to watch going into the open today. You have NIO and XPeng leading the gains on Friday in the U.S. session, so that's one cohort to watch today, as well as some of the solar plays, as you can see, substantial gains as well in the Friday session in the United States. Going into the open today, futures coming up on your screens. HIBOR is a big part of the conversation, with strength coming through, of course, in the Hong Kong dollar. As you can see now, we're quite some distance from the 785 limits on the band as well. So, the big jump in HIBOR rates on Friday, right? 40 basis points was the highest, or the biggest single-day jump in HIBOR going back to about 2.5 years from now. And speaking of sort of moving up in yields, 10-year yield at 176 is a level we haven't seen since, get this, Liberation Day in early April. So this melt up in Chinese 10-year yields, and what that tells us about the underlying state of the economy and whether or not the rally here actually makes sense given the gloominess around the actual economy.
Yeah, the reflation trade is still there, as you mentioned, despite what we saw in that data dump on Friday, where it basically disappointed in multiple fronts as well. So this dichotomy, this gap that we're seeing, can it continue? We're going to dive deeper into that with Bank of America and BNP Paribas in the next hour of the show. But in the meantime, here's what to watch in Greater China here this week. And today, really, Wang Yi in India, that's first and foremost, coming off, of course, after what we've been hearing from any news from Alaska, and really what this means when it comes to the thawing of ties between Russia and China. That's certainly going to be one theme that we're watching out for. Southbound flows, right? Friday was a record when it comes to mainland Chinese investors buying Hong Kong stocks, $4.6 billion, and basically making up 86% of that sort of quota there. So turnover certainly is the key thing to watch. Sectors in terms of earnings, we have NEVs, we have banks, we have solar to watch out for as well. Earnings including the likes of Leapmotor, that's one to watch here, Xiaomi, XPeng, the like. Shanghai Composite, we talk about some of those levels there, and of course as HIBOR, as Dave mentioned, is also what to watch. But we kind of talk about what happened in Anchorage. And really, there wasn't a deal. But then again, it seems like we're now getting into this meeting between Zelenskiy in the Oval Office and European allies. And there's a lot of questions on what they can do to kind of steer maybe Trump off maybe what was discussed in Alaska in some ways and bring it back to their agenda. And certainly it could be a pretty tall order there.
Yeah, and we know what happened last time Zelenskiy was in the Oval Office, right?
Yes.
And that's still etched in many people's memories. And now he's coming, of course, with a group and his backers sort of to help understand, I think, for one, what the security guarantees, if that's going to be part of the conversation, and whether or not the focus will be on some of Russia's demands and what those demands actually are.
On territory.
On territory, right?
Yeah.
And what the trade-off is between the two. Because, again, we don't know a lot of details of what happened, what the agreement was coming out of Anchorage, and what that also means for the Chinese tariffs conversation, right? Because I think Donald Trump himself said he doesn't need to be talking about higher tariffs on China this time around in relation to purchases of Russian oil, but he may need to revisit that in a couple of weeks.
And what does that mean for India, right?
Yes.
Countries like that still continue to buy Russian oil and are still in the midst of a very, very tough kind of trade negotiations with the U.S. as well. So that's certainly a lot that we need to weave into, right? I love the FT's Gideon Routman. He mentioned Zelenskyy in the lion's den. This time he's going into the lion's den with a lot of allies. Right, a whole list that you mentioned from your AU to back him up in some ways, and maybe try to avoid what happened back in February as well in the Oval Office. Turn our attention now to maybe Jackson Hole, right? That's still the big one, as you mentioned, right? How dovish can this be, the speech from Jay Powell, and is he going to really kind of settle the speculation once and for all that maybe we're getting sooner to a cut? Yeah,
can he endorse it 100%, right, in terms of what the market is pricing as far as that cut goes? But, I mean, he still has... Again, lots of data between the time when we had that meeting, of course, and, of course, the jobs report, well, the actual September 18th Fed meeting, and, of course, the payrolls report will effectively cement that and not so much the speech itself. So we'll see how clear and how committed he might actually sound, Jay Powell, ahead of all these things coming through. Right, but, again, taking place against a backdrop of an equity market that is doing quite well despite all the risks out there.
Yep. All right, let's get to our top story first and foremost here. President Trump in a meeting with his Russian counterpart Vladimir Putin in Alaska over the weekend and agreeing on security guarantees for Ukraine. Let's hear from the two leaders following that meeting.
I believe we had a very productive meeting. There were many, many points that we agreed on, most of them, I would say, a couple of big ones that we haven't quite gotten there, but we've made some headway. So there's no deal until there's a deal.
I would like to thank President Trump for our joint work, for the well-wishing and trustworthy tone of our conversation. It's important that both sides are result-oriented, and we see that the President of the U.S. has a very clear idea of what he would like to achieve. He sincerely cares about prosperity of his nation. Still, he understands that Russia has its own national interests. I expect that today's agreements will be the starting point, not only for the solution of the Ukrainian issue, but also will help us bring back business-like and pragmatic relations between Russia and the U.S.
And Jill Deeses is here with us, our Bloomberg News Desk editor, to help us understand and give us a preview. And things are moving fairly quickly on this front.
Yes, that's right, David. And I think there's still a lot of questions about what exactly these security guarantees would actually contain. So I thought what was particularly interesting was after this meeting, Steve Witkoff, the special envoy for Donald Trump, said that actually some of the things that had been agreed upon in the meeting, including some language that would be akin to like NATO Article 5 type language, which essentially means that if, potentially if Ukraine is attacked, then NATO would treat it as if, an ally was attacked. But at the same time, we also heard from Witkoff that Putin's red line is NATO membership, that he absolutely would not consider, membership for Ukraine in NATO. So you kind of have these conflicting ideas about how exactly that kind of security guarantee would actually result. And so, again, that's kind of opening the door to, I think, some lack of clarity and confusion there. You also had Marco Rubio, the Secretary of State, giving, sort of not going as far as Witkoff did necessarily in terms of talking about some of those security guarantees. And then all of this combined with the fact that, we do know that Putin, really does, want to some land guarantees out of this kind of, out of whatever would happen in a potential truce. Trump seems pretty receptive to that idea as well. And we've heard from Zelenskyy that that wouldn't be on the table for him. So it does feel like even though you've had this big discussion, obviously we've got this upcoming meeting, I'm not really sure that we're much closer in terms of actually understanding what a true ceasefire or ultimate peace deal would look like.
And I think you can't help but think about what's going to happen later on today and think back at what happened in the Oval Office just 6 months ago when Zelenskyy had a very disastrous trip there. How much do you think that trip is really kind of hanging on his mind here as he gets into the White House once again.
Yes, Yvonne. Well, look, I think, certainly you can't forget that meeting. As you said earlier, though, this is a little bit different. I mean, certainly Zelensky goes into this meeting with a lot more allies. You've got Ursula von der Leyen is attending. You've got the UK's Keir Starmer. You've got Mahoney from Italy. You've got, I think the German chancellor is going as well. You've got a pretty large contingent of European leaders, all of whom have a pretty vested interest in making sure that their thoughts are heard here. Obviously, they had an opportunity to do that in a call with Trump last week ahead of this this meeting with Putin. So that does kind of change the calculus a little bit there. So maybe it's a better meeting for Zelensky. Also, unlike earlier this year, Trump does seem to have grown increasingly frustrated with the fact that he can't get Putin and Russia to a deal. I mean, he certainly expressed a lot more frustration with Putin recently than he has with Zelensky. So maybe that plays in favor. But of course, anything could happen in the Oval Office. And it kind of, ultimately depends on how exactly Trump then conveys, some of what happened in this meeting with Putin as well. So, yeah, I mean, it does feel like such a live meeting that's happening later today. And then ultimately, I mean, maybe that's really whatever comes out of that meeting may be ultimately what's most critical for, achieving some kind of a deal here.
All right, Jill, thank you. Jill Deesis there, our desk editor, with the latest on what is to come on this Monday in the White House as well. Let's check in on the market reaction and really what to look ahead to this week with our executive editor, Paul Dobson, in Singapore. Paul, it's a pretty mild reaction, I guess, what we're seeing across markets after this sort of Trump-Putin meeting. But I'm wondering, with Jackson Hole at the end of the week to really kind of wrap things up for us, what's going to be top of mind for you?
Yeah, good morning, Yvonne. So the market reaction may be fairly mild, but it's also notably kind of a slightly positive tone, right? We have slightly weaker oil prices. We have futures for US and European equities up a little bit. The FX market has a weaker yen, a stronger Aussie dollar. So all skewing in a slightly risk-on way. I'm quite surprised because I felt that the market was already pretty optimistically priced going into this meeting. We had some rallies when the news was announced that Trump was going to be meeting with Putin. Probably what we actually got out of it was more or less the base case scenario. The Trump did not ratchet up pressure on Russia notably. So perhaps, kind of that eases the pressure on oil prices. They're down around a 2-month low. He also didn't get a peace deal or anything like that, or a ceasefire as yet, but left the door open for that to happen at some point. And so therefore, maybe that's why the European equity complex in the US market is just leaning a little bit positive this morning. You're right, the back end of the week is also going to be important when we get to Jackson Hole. We'll, of course, be very interested to hear how much Powell signals that the Fed is going to start cutting interest rates again and how aggressive it might be when that gets going.
Yeah, Paul, I'm looking at the pricing in the rates markets around the September meeting, and markets have certainly tempered a little bit their expectations. They're 85% probability of a rate cut. Can I ask you about China and the rally taking place there, particularly onshore? You had massive flows coming through as well into Hong Kong through the Stock Connect on Friday. It's a big earnings week in China as well. Just help us understand what your team's looking at there.
Yeah, so that positive momentum seems to be carrying through, doesn't it? We're close to some pretty exciting breakout levels, particularly on the Shanghai Comp, not so close on the CSI, so it sort of depends which gauge you're watching to take the temperature of Chinese markets. But nonetheless, there feels like there's that kind of steady drip, drip, drip of stimulus on the policy front in terms of social payments, social welfare payments, that kind of thing. The market likes the anti-involution narrative as well. So we're getting that buoyancy coming through in the equity space still. And on the flip side, a little bit of pressure on the bond market as well, those yields ratcheting up. We'll be paying, as you said, attention to what we hear on the earnings front and the economic data, and watching those signs of liquidity, which has been pretty flush in the market at the moment, has been helping it lift up. There's been some reports coming back because we had the slightly weaker data last week talking about the possibility of some stimulus on the monetary front as well at some point this year. I mean, I don't think anybody's holding their breath on that particularly, but watch for any signs that is getting a little bit more of a stronger indication in the financial news commentary this week as well.
Paul, thank you. Paul Dobson in Singapore for us, our Asia Markets Executive Editor. Right, coming up here on shows, more on the Ukrainian president's high-stakes visit to Washington this Monday, of course, with backup from Qiao. Well, everyone's pretty much going to be there. We'll get a view from China next. Also to mention, going into the Open today, well, for one thing, we're looking at the weather. Again, heavy rain in Hong Kong this morning. And number two, Hua Hong Semi is suspending its trading in Shanghai on Monday. No word, though, on the Hong Kong listing. The company is planning to buy a controlling stake in Shanghai Huali Micro. More on that, plus other moves to track. The opening bell 15 minutes away. Good morning. Right. European Commission President Ursula von der Leyen will lead a host of European leaders supporting Volodymyr Zelensky as he makes a trip, of course, to the U.S. and that meeting in the White House later Monday with President Trump. Now, the Ukrainian president will be keen to find out exactly what Trump committed to during his summit with Vladimir Putin.
Our next guest thinks that Trump is running out of time to broker a deal. Josef Mahoney is professor of politics and international relations at East China Normal University and joins us from Shanghai this morning. Joseph, it's always great to have you. There's a lot of questions on what was agreed upon. Tell us a bit more. What do you think came out of Anchorage?
Well, I think, first of all, the fact that the meeting took place on Russian soil, when I saw that Putin was going to go to Alaska, which, notwithstanding the historical legacy that once belonged to Russia, it was really quite surprising given, all of the sort of criminal discourse that we've associated with Putin in American mainstream media over the last several years. But I think it was a show of confidence. I think certainly what we saw him insisting on with terms, although they were probably a bit inflated as a negotiating tactic, clearly demonstrates that Russia feels like it has prevailed and that the spoils of war go to the victor in this case. And I don't think we saw a considerable pushback from Donald Trump on this.
And how does that then color this upcoming meeting with Volodymyr Zelensky heading to the Oval Office? Is he walking into the lion's den, you think, there, Joseph?
Well, I agree with your lead-ins where you were saying that he's going with these various European leaders as sort of a cover or protection. But, of course, they have their own interest. They're concerned, of course, about the future of NATO. Certainly Zelensky, if you've been to Ukraine, you've seen the NATO symbols everywhere. Ukraine certainly envisions itself being part of NATO and even the European Union at some point. But the future of NATO at this point is really something that is concerning for European leaders who aren't prepared yet to really take full responsibility for their own security. I do think that the goal here is to, with the European leaders, to try to assure their own voters that they're engaged and being part of this, even though Trump has largely excluded them. And I would say, it wasn't simply the bad meeting that Zelensky had in the White House previously. We also have to go back to the meeting where Vance, at the beginning of the Trump second term, where he went and he browbeat European leaders on European soil. So these, I think, are some broader issues. Yeah.
And we're hearing from the president now in a Truth Social post saying Zelensky can end the war with Russia almost immediately. He could end the war with Russia if he wants to. So he is continuing to put more pressure on Zelensky, it seems, this morning. Joseph, I have to get your take on overall this whole concept of security guarantees. What do you think was actually discussed in that front? I mean, does it mean that it requires some sort of commitment from Europe to fight if, in fact, Russia attacks Ukraine again? And what do you think is the U.S.'s role in all that?
Well, I think that Russia has achieved its strategic goals in Ukraine. In fact, these were largely secured a couple of years ago, or at least a year and a half ago. And the fighting that we've seen since then has really just been trying to create pressures to bring some sort of resolution. I don't think Putin has substantially additional objectives in Ukraine at this point. And I think it's also a foregone conclusion that we'll see something like a NATO security protection for Ukraine going forward, and that would be the trade-off that Putin he will accept that for the territory that they've already seized, and I don't think that he'll get much more, if any. But the question about Zelensky is, When I was in Ukraine 2 summers ago doing research, what I found was a country that was very divided politically, and there are a lot of different political interest groups there. Ukraine has really struggled, I think, to believe that they could maybe negotiate a peace. So it's the idea that Trump says that Zelensky could, make a deal immediately. I'm not sure that's the case. I'm not sure that he can impose that sort of deal on the various factions that are still likely subdividing Ukrainian politics.
So, Joseph, just a quick word then, and just based on the last comment you just made just now. So, are we getting our hopes too high of a meeting between Zelensky and Putin? Some say it could happen by the end of this week.
I think that anything is possible. I couldn't have imagined that Putin would have agreed to meet again Trump in Alaska. I would have thought a third country would have been more likely. But I think the animosity that Putin has for Zelensky and vice versa is considerable. I don't think we'll see a meeting this week, but I do think we will see considerable pressure from the White House being brought to bear on Zelensky and Europe, but this being purchased by maybe Europe, the U.S. taking a softer position towards NATO in concord with European concerns, and maybe even providing the sort of security guarantees that Ukraine wants and perhaps needs.
And Joseph, the way that, at least the most direct way that China's been pulled into the conversation has been because of these purchases of, and India, I should also note, purchases of Russian oil. How do we need to be looking at that specific prism?
Well, I think in the case of we've seen obviously Trump try to politicize this, threaten India with increased tariffs because of the Russian oil purchases. It's interesting that India has increased its American or U.S. crude purchases by 51% this year. Sort of a curious number, but that's still a fraction of the amount of oil that they're buying from Russia. And in fact, I think it's really difficult to wean India off Russian oil because it's so heavily discounted that other countries, the U.S., can't really compete with the price that Russia is selling at. And plus, it takes time to diversify. Now, we saw China diversifying. We've seen China sourcing more energy from Central Asia, from the Middle East, and declining to build a new pipeline despite Putin wanting that. To Russia. So I think this has been balanced. But anyway, it will take time. And Trump simply doesn't have time for that sort of game to play out. In the meantime, we will have the potential of India, China, and Russia drawing closer together, something that Trump is certainly looking over his shoulder at as he tries to move forward and resolve this conflict with Ukraine and Russia.
Yeah, the energy dependency sort of angle we certainly need to stress as well. Joseph, thank you. Joseph Gregory Mahoney there, professor of politics and international relations at East China Normal University. Your pre-market is coming up. We're slightly to the upside in the Hang Seng here. Plenty more to come. This is Bloomberg.
All right, we are just 3 points away on the Shanghai Composite from setting a fresh 10-year high. We'll watch that at the open, plus other things. The opening bell is coming up next. Right, welcome back. You're watching the China Show, counting down to the open at markets, and we are on a bit of a run. Onshore markets, we're very close to certain milestones. Hang Seng Index is flat going into the open today, and of course there's a lot of event risk. Earnings, big meeting coming through in the White House, and of course at the end of this week is a monetary policy extravaganza.
Jackson Hole, is that what you're talking about? There's a lot of volatility in the weather, too, right? You talk about the different rainstorms, and my heart goes out to all the parents out there that was checking the weather this morning and what the education Transportation Bureau was saying as well. Certainly a lot of back and forth on that front as well. But yes, markets are still doing very well despite the weather, right? Take a look at what we've been seeing when it comes to the Shanghai Composite. As Dave mentioned, we're flirting with those 10-year highs right now for the A-share market, and certainly we're watching very closely that weak data doesn't really derail it. In fact, maybe it's a bad news is good news situation that we're seeing, that maybe this means more bets on further stimulus. Shanghai Composite, there you go. We're at 37.12 here right now. We're up about 0.4%. And CGB yields, right? You talk about that 10-year yield hitting 175, 176.
Yep.
That is a 4-month high for that gauge. So certainly you're seeing money taking out of bonds and into the equity market. And we'll talk about those southbound flows later on. But yes, it was a record on Friday of mainland investors buying up Hong Kong stocks once again. And take a look at what we're looking into in Hong Kong. Yeah, you're seeing a little bit more momentum here. So key to look out for is, of course, a lot of earnings to tell you about, particularly when it comes to the tech side of things. So Xiaomi, XPeng, the like, some of the EV makers, PopMart, Laopu Gold, they're all reporting this week as well. So certainly some big names that could actually move the dial here. And we're watching very closely what goes on when it comes to the tech space, right? So Alibaba, Baidu, and Tencent all doing pretty well this morning. We're watching some of the oil names. So oil markets actually fell after what came out of that Alaska meeting between Putin and Trump. So its market has saw it as a little bit of a positive, maybe some progress. At least we've taken away that possibility of the worst case scenario of a breakdown in talks. And that's why we're seeing some of these oil names are moving lower, but it's a pretty mixed picture overall. And earnings today, right? So Leapmotor, that certainly is one thing to watch, given the surge in the stock, which will tell you about, I think it's about 200% or something of late. So that's certainly one to watch here. The next in the sort of rising EV stars out there as well. Also watching Xstep, Sino Biopharma, Meitu are all looking to post quarterly earnings here today. But Dave, it's really about liquidity.
It's been enough, right? Up until this point, you didn't really need an economy that was firing on all cylinders. In fact, you could actually think about it that way, that is the market actually part of this sort of policy cocktail of policies to help reflate consumer sentiment. Certainly all this liquidity coming in, whether that's coming through out of low interest rates, whether the trade surplus, and then rehashing, of course, all the dollar in the system. For one, it's coming into Hong Kong. And, of course, on Friday, we hit a record high in terms of the amounts of net purchases of Hong Kong stocks from mainland investors. This hit about 36 billion, which is actually about 85% of the daily quotas. In fact, we've never actually seen that level. Right. 37.04 currently on the Shanghai Composite. The level you're watching is 37.15, and then you have 2 decimal points. So we're extremely close now, 0.3% from hitting the 2021 high. Beyond that, we're back to the highest level in about 10 years or so. So a lot of levels to watch today, or at least this week, Yvonne.
Yes, and we keep hitting them, it seems, day after day when it comes to either turnover and the like. So certainly we'll continue to watch, of course, this A-share rally. We're still set for a 4th straight month of gains on these China-listed A-shares. And that really, despite last week's data showing the economy slowing across the board in July. Let's bring in Winnie Xu, our Asia equities reporter. She's with us here right now. And it seems like traders are really willing to brush off any sort of bad news after we got a pretty disappointing data dump on Friday.
Yeah, exactly. Friday, with the weak data, it was actually really surprising how the market reacted, right? We were trying to figure out why the Chinese stocks were so resilient on Friday. And main reasons we heard, like you mentioned earlier, was that these weak data potentially means that the government might come in and step in with more policy support. But overall, when you take a step back, the sentiment has been pretty strong because of the better relationship between U.S. and China, especially when you compare that with India that was getting hit by a 50% tariff. So that change in sentiment, and also a big part, retail liquidity, was what you mentioned. Last week, we saw that record amount of savings among Chinese households, and also margin loans taken out to invest in the Chinese stocks, right? So those are quite supportive of that slow bull run in the Chinese markets that we also see the government was trying to promote for.
And again, we're looking at southbound flows still as a leading indicator. What are you guys watching specifically there, particularly this week and today?
Yeah, so like we talked about just now, overall sentiment has been strong for the Chinese market, and whether that's onshore, offshore, both quite strong. And in terms of offshore, we talked about the earnings that we'll be watching soon. So that is what's on top of what we've discussed as that the catalyst for the onshore market. You've also got kind of the tech stocks that we're watching, which has been already rising on the DeepSeek optimism earlier this year. But actually, with the ongoing conversations between China and the U.S. around the H20 chips, people are betting that, the China tech names actually have more to come. And the overall sentiment among global investors are also rising for the Chinese stocks because of that rotation, potentially away from India and into China. So for the offshore market, we're seeing whether it's from the mainland investors or global investors, the outperformance is still likely to continue as it has already risen about more than 20% this year. And with that, we're seeing the narrowing of the AH premium, and that is at the lowest since 2017. So actually, last year, JP Morgan had a very interesting note saying that they might see the AH premium to reach parity in 2026 or 2027 if we expect the southbound flow to continue to be quite strong.
Interesting. And there's still some structural issues, right? When you talk about we're still in deflation, the property market is still a concern here. I mean, those are still some key headwinds for any kind of long-term investors to really jump on this rally.
Yeah, exactly. So actually, with this year being the 35th year of the onshore market, we took a step back to look at why some of the long-term investors are still unwilling to invest in Chinese market. And that is because how it's set up to be really more about funds, raising funds instead of focusing on the shareholder returns. And when you look at the past 10 years, S&P tripled, right? And if you invested money in a Chinese onshore stock market, you only got 30% back. So even while the economic has really boomed in the past 10 years, so that really made investors to still be quite cautious until they see some structural changes, how the market is set up. If they're going to actually see the stock market to provide more incentives for shareholder. And yes, we've seen some push from the government. However, it's more important than ever for the government to prop up that onshore stock market, especially because the property market hasn't been really providing confidence for the Chinese investors. So with a stronger stock market, they are potentially going to have the Chinese investors to see more investment and to see more gains around the investment, which can potentially help with their consumption. And with that can potentially help improve that trade imbalance that we're seeing between the U.S. and China.
Yeah, they got to move that record household savings somewhere. All right, Winnie, thank you. Winnie Xu there, who covers Asia equities for us. And we'll be talking more in our next hour about this very own disconnect, right, that we're talking about between markets and economy. We have BofA Global Research and PNB Paribas, Jason Lloyd to talk about. So Helen, Qiao, and Jason will be joining us here in the next hour to discuss mind the gap, they say. All right, it's a big week for earnings as well. It's not just about Jackson Hole, not just about what's going on in Alaska and D.C. later on as well. So here you go. Here's just a kind of a list of them. I mean,
there's a beer
take
stock.
a look. Is there a beer stock?
Yeah, China Resources beer.
I mean, yeah,
sorry,
you might need one after.
Gravitate towards.
If you wrap around and digest all this that's going on. So Hong Kong Exchange, Pop Mart, you have a little bit of the biotech space as well. Sign Up Biopharma, Wuxi Biologics, Laopu Gold. You want traditional consumption plays like Li Ning as well. You got Wonka. I mean, it's a little bit of everything, really. So take your pick on what you want to take a look at.
I'm more a Consino bio guy.
Are you?
Yeah.
Not Labubu's?
Old school, fundamental, necessary. But yeah, I mean, you could make the same argument for Labubu's, really. Depends who you ask.
All right, let's ask our team of experts, right, and really what the outlook is, and bring in our Asia Tech correspondent, Annabelle Jewelers. Belle, there's lots of names to really highlight this week. But you're also looking at just how investors are still continuing to really lean into the AI theme in Asia, too.
Yeah, that's right. I mean, we've continued rather to see these companies, so rather asset managers, continuing to pivot toward AI. I mean, you had sort of the success, of course, of DeepSeek, but you've also had these semiconductor firms in Asia like TSMC, of course. But you've just got essentially investors that are doubling down now on the AI bets. So it is a winning trade in this region. The AI companies are actually the 6 biggest contributors to the gains that we've seen in emerging market stocks so far this year. But I do think it's sort of important to caveat when we talk about emerging market stocks, the names that we talk about are not necessarily names we think about as being emerging market names either, but ones like TSMC, as I mentioned, Tencent, Alibaba, Samsung, SK Hynix, Xiaomi, they've altogether contributed for nearly 40% of the index's rally. So it just tells you the sort of growth you're seeing. You can see here how that is really driving the earnings bets and building into these broader EM profit projections. What's interesting to note as well is how you continue to see these bets on AI actually contributing to the bottom line, because firms in the AI-heavy IT sector have actually consistently been meeting earnings expectations since the 4th quarter of last year. You can't actually say the same thing for EM stocks generally.
That takes us into one specific name that's reporting tomorrow.
Xiaomi.
Yeah, there we go.
Your favorite.
Yes.
Yeah, that's actually. I'm actually really happy I'm back from holidays to report on
Just in time, Belle.
Yeah.
Okay, give us a
That's how you time your vacations, really.
I know. Okay, there's sort of 3 main stories to Xiaomi. You've got the smartphones, you've got the home appliances, and you've got the EVs as well. So broadly, we're expecting strong results. Our Bloomberg intelligence team is saying that at headline level, sales could have increased 30% on the year. Smartphones is going to make up probably the least proportion of that. It is sort of the bread and butter of the business, but it's looking at gains in maybe the single digits. IoT has continued to perform really strongly for the company, and that's also off the back of these trade-in programs, these subsidies. That's expected to extend, but the big focus is going to be really on the EV sector and the business for it, because that has just continued to go from strength to strength since it was launched last year. And actually, our Bloomberg intelligence team in a separate report is saying that by next year, Xiaomi could be outselling Tesla in mainland China as you start to get those economies of scale. Not only does it contribute more revenue, but it also starts to improve the gross margin for the business because you get the economies of scale. And again, Bloomberg intelligence is saying that that could have improved to 22.5% in the latest reporting period.
Okay. You've been also tracking, no pun intended there. They were on the track yesterday or on the weekend. Humanoid robots, right?
Yeah.
And didn't Unitree come out?
Unitree came out in front in the 1,500-meter race. Yeah, and they did it in like under 7 minutes. I mean, it's really crazy amount of time. Unitree, of course, is seen as sort of the leader in the humanoid robot space in China, or a leader in it. This was a game that, I mean, you're seeing this vision here. You can see it kind of goes through different events that there were. So you had football, for instance. There was table tennis. I think there was sort of 26 different medals up for grabs. But I think a lot of that focus really was on that main race that Unitree took the top prize, and they had another top prize in a separate running race. So, I mean,
I love that the humans have to run with the robots, though.
Well, that's the thing as well to note, actually, because at a lot of the events, it is worth pointing out that they were still being controlled by humans. It's not fully autonomous, but yeah, I mean, boxing. We can never have enough robot boxing.
No.
Yeah. So anyway, that happened in Beijing. It was a 3-day event over the weekend.
It's very
6 minutes 35 seconds for the 1500.
Could you do that?
I believe.
Well,
that's easy.
Marathon,
that's easy. Yeah. That's slightly slower than my half marathon pace, actually. Yeah.
Just a little bit.
Because a mile is 1,600, right? It's 1.6. But anyway, yes. Also, by the way, Faith Kipyegon, if nobody knows, was also on with 3,000 meters, but that's actually a real humans in the ring race. Also, by the way, world record over the weekend. Anyway, let's leap back into our topic, shall we? And of course, Belle, thank you so much, by the way. Belle Jewelers there, of course. Speaking of leaping back into the EV conversation here, Leapmotor posting earnings later today. The stock is up, as Yvonne is pointing out, 200% from hitting a low after hitting a low in August of last year. That's beating peers Xpeng, and as Belle was pointing out, Xiaomi. Linda Liu, our reporter, is here with us to give us a preview of the stakes are high on this one.
Yeah, well, I think analysts are expecting Leapmotor to post really strong growth for their revenues. Their deliveries have just been on a surge since last year. So they've been seeing really astonishing growth, more than 100%. So I think revenues are going to be quite good for this quarter as well as the first half results. In terms of net income, they're going to be probably slightly lower increase just because Leapmotor sells very affordable mass market EVs.
Tell us a bit more about this company. I mean, it's not really quite the household name yet. It's kind of been a fringe player in the whole EV space. How did it rise up the way that it has?
Yeah, Leapmotor has been an underdog for most of its early years because its sales haven't really taken off until probably about last year. I think part of the reason is that China has been going through this economic slowdown, and that's caused quite weak consumer sentiment. So that's actually really helped boost its sales because its positioning is a really, affordable mass market brand. It sells really family-oriented SUVs. So I think they're coming out more attractive than some of its peers that probably target the higher-end segments.
All right, Linda, thank you. Linda with the preview there. When it comes to Leapmotor, and coming up, we're going to talk a bit more about earnings there. Australian property developer Lendlease is back in black after last year's loss. We speak live with the group CEO and MD, Tony Lombardo, about their turnaround plan, including a massive divestment of assets. Much more ahead. This is Bloomberg. Some big political stories that we're tracking for you today. Hundreds of thousands of Israelis have rallied amid a nationwide strike, demanding an end to the war in Gaza and a deal with Hamas to release the remaining hostages. Organizers of the biggest protests in Tel Aviv say 500,000 people gathered in what's now known as Hostage Square. Netanyahu's government this month gave the army the green light to take control of the de facto capital, Gaza City, and crush Hamas holdouts. China is escalating its trade fight with Canada, filing a WTO complaint over Ottawa's steel tariffs and quotas. Beijing calls the measures, quote, typical trade protectionism after also slapping duties on Canadian canola. Tensions have grown since Canada moved against Chinese steel, aluminum, and electric vehicles. Ottawa says it's protecting domestic producers hurt by U.S. tariffs.
Right. The other big development that we've seen in the last week and a half is this coming together between the Chinese and the Indian side. You have the Chinese Foreign Minister Wang Yi is, in fact, in India on Monday as Beijing steps up efforts to ease these long-standing tensions. Now, his visit comes with the Modi government's ties with the U.S. starting to fray over, of course, we were just talking about their tariffs out of the White House. Let's bring in Min Min, our China correspondent, to talk us through the timing of this is pretty strategic given everything else that's going on outside of it.
Yeah, India is actually seeking to continue trade talks with the U.S., right? It's supposed to take place next week, and local media is now reporting that those talks may be rescheduled. And it's also interesting, given Trump's latest comment saying that he's going to hold off these tariffs on China, doesn't mean that the U.S. is going to also lower tariffs on India for, buying those Russian oil. So this is certainly something in focus, but given the additional tariffs that India has been facing, that places a lot more urgency for India to start to diversify its market. So we started seeing this thaw in relations from late last year after Modi and Xi met at the sidelines of the BRICS summit in Russia. We have seen how both sides are looking to resume direct flights to both countries. And then also India started recently to give out Chinese tourist visas to Chinese nationals as well.
So what do we know in terms of the agenda? What's going to be happening in the next 3 days?
Yes, Wang Yi is going to meet a number of top officials, so including the National Security Advisor, the External Affairs Minister. He's going to meet with Prime Minister Modi as well tomorrow. That's ahead of Modi's planned trip to China sometime later in the month to go for the Shanghai Cooperation Organization meeting in Tianjin. And the purpose of this meeting officially is to de-escalate tension at the border. We know that by some estimates, there are still about 50 to 60,000 troops at each side of the border. And we understand from sources that China and India are now looking to potentially reduce the number of troops at the border. This would be a very significant sign of how both sides are really starting to restore trust there. They're also hoping to potentially restart those trading posts that are situated along the border. It's a small amount of trade happening, but again, if they restart, reopen those posts that has been closed since COVID, is also another significant sign of this warming of relations.
And which sectors have emerged as winners and losers given this sort of fresh conversation we're having between the two sides?
Yeah, so tourism and airlines industries, those are going to be the biggest beneficiaries, at least if, both sides resume those direct flights. We already see airline shares gaining on the back of that. And of course, the electronics company, pharmaceutical companies from India that import a lot of key ingredients from China could benefit from looser export controls. And then we also have this quiet resurgence of interest from the big Indian companies like JSW and Adani. They have been looking to quietly seek more cooperation with Chinese firms for more tech transfers, and it's happening very quietly because China had ostensibly been very opposed to any tech transfers to India. The Indian government has also been screening and scrutinizing Chinese investments, but if we do see publicly, this signal of a spring awakening, if you will, between China and India, we might start to see a resurgence of deals between Chinese and Indian companies as well.
Interesting. Min Min, thank you. Our China correspondent, Min Min Lo, there with the latest on what to expect. Another check in the markets here, of course, and we're continue to watch, of course, these key levels that we're tracking in the A-share market, in particular when it comes to the CSI 300. So we're still about 1% away from hitting those peaks that we reached in October.
Yeah, that was a few weeks. That peak was a few weeks after the briefing coming out of the PBOC in late September. So that's certainly one level to track. The Shanghai Composite is a separate level, but the same drivers have really driven up both those benchmarks. In fact, I'm just counting right now before I talk about the stocks on your screens. We're only 24 minutes into the session, and already turnover onshore has crossed 700 billion renminbi. So, in fact, we took out 2 trillion for a third day actually. So Wednesday, Thursday, and Friday last week. So turnover's been picking up, brokers, what have you. NIO is actually a big move coming off the big move we had on Friday for similar shares. JD.com was also quite a big move there. It's a big earnings week. We'll talk more, I guess, on the back of that. And Hua Hong Semi is now falling. Shares are suspended in the onshore markets on the back of this purchase.
Stake that they're buying.
Yeah, the stake that they're buying.
Micro.
Yeah.
Solar stocks also in focus. Trump hit tax credits. We're actually softer than feared, so some solar stocks actually breathing a sigh of relief this morning. Plenty more to come. This is Bloomberg. Welcome back to the China Show. Here's a look at the CSI 300 a half hour into the session. And yes, we're continuing to see momentum behind this A-share rally, and really it's defied weak fundamentals. It's defied tariff headlines. And now we're already talking about milestones where we're hitting peaks that were set October of last year.
I'm so excited. Right now. If only you guys could see my heart rate right now on my watch.
Yes.
It's rare that we get this sort of simultaneous cross-asset consistent narrative. Money's coming out of bonds. It's going into the equity market. It's going into the onshore market. It's coming offshore. So turnover at this time of the day is usually not at the level we're seeing at right now. Case in point, turnover onshore has crossed 700 billion already, renminbi. In the first 25 minutes of trade, we're session highs there. CSI 300, 1% away. Shanghai Comp is now, we are now in fact, we're there. Guys, can we flip the page, please, and have a look at the chart that's coming up on your screens. Now, the bottom panel, if you see a 0 on the bottom panel, we're effectively now at the highest level in 10 years. So we're pretty much there. The level to watch is 37.15. the Shanghai Composite. So yeah, we'll continue to track this very, very closely, but this is really just academic and underscores the trend we've seen of late.
And what's driving this divergence that we continue to talk about between the economy and these robust markets? And, you know, it's for one, you know, it's China's ability to weather some of these tariffs that Trump has underlaid here. The weak data, I guess it means it's, you know, bad news is good news, that maybe there's more bets and more expectations of fresh policy support. And there's also the low interest rate environment, as you talk about, right, which is really encouraging a lot of households, Dave, with record savings to really shift away from equity, shift to equities for better returns. So maybe that's why you're seeing that rotation out of bonds into stocks still.
Yeah, into equity markets. And I think the round table that we're going to have a really deep dive into this dichotomy, this conversation around whether or not the rally should be taking place. You know, an interesting observation really has been money's come out of savings.
Yep.
It's gone into financial instruments. Should that be going into more economic assets, right? And at some point, if the economy were to recover, does that mean the stock market needs to pull back a little bit because liquidity then goes somewhere else? And I think it's a conversation. Certainly, questions that we'll be asking later on, of course, our guests coming through at the bottom of the hour. In the meantime, though, let's get more context on these markets. And joining us now out of Singapore is Mary Nicola, out of our MLive team, to take us through what they're watching. And Mary, can I just start by just asking about how you guys are viewing this sort of quiet resurgence and march higher in onshore Chinese equities here?
Yeah, a lot of it really does have to do with, as you mentioned, is the shift away from more conservative assets and a shift away from bonds into equities. So you have seen an increase in margin accounts. You have seen in the monetary data as well, where people are moving and increasing their equity investments as a result. So obviously people are looking for yield. And of course, because the property market still remains in the doldrums, you have to look for yield elsewhere. And right now, where you're providing returns, where you're seeing those returns is in equities. What's interesting, though, is how so far, actually, if you look at the Tech 8, we've seen mixed results so far from who've reported, and earnings season has been okay. And then, of course, we had a stream of lackluster data. So they're defying the odds, despite all of these setbacks, and of course the tariffs as well. But I think what the focus really has been, and what we're seeing, is that shift away from safety assets into more risk assets, particularly for China and for the households.
Yeah, I certainly continue to see that momentum. Take a look. I mean, I'm looking at this week, and you have a great sort of piece that kind of highlights maybe some of the risks that we're dealing with risk assets leading up to Jackson Hole. And you're saying that we might actually see a retreat on the back of what we hear from Jay Powell. What are you going to be looking out for in particular?
Yeah, what we've seen so far, especially in the run-up to this rally, a lot of the rally has been fueled by prospects of more Fed easing. For example, we had almost just a few days ago, we had traders pricing in as much as 30 basis points of cuts in September. Obviously, that's retreated, especially after a hotter than expected PPI. Then we get U.S. Retail sales that was stronger that was robust, and of course, University of Michigan inflation expectations were also higher. So there's a lot of signs in the economy that points to mixed messages of what the Fed really will take on as more important. So if Jay Powell focuses on the labor market and sets aside some of the increases and some of the tensions in prices, then you can see the rally resume. But you really need for cues from Jay Powell to really reignite that rally, because that really has been what has fueled the markets over the last few weeks.
Yeah, and as you say, may not see any more fresh catalysts moving forward after that. Mary Nicola, our Bloomberg MLive market strategist, joining us out of Singapore here this morning. And brings us to some of the top themes that we're dealing with. And it really was what came out of Alaska, right? And what didn't come out of Alaska as well in some ways. But it seems like it's going to come down to this whole kind of trade-off between territory and what Ukraine is willing to give up, and maybe the security guarantees that Trump alluded to that came out of Anchorage, too.
Yeah, and we're trying to figure out what the deal was.
Yeah.
And I think Volodymyr Zelensky heading there with, of course, some backup and support. They're trying to figure that out too, right? And to what extent, because they're conflicting concepts, right? To what extent can you provide NATO-style security guarantees without giving membership, right?
Yeah.
Which is, we know, of course, a red line for Vladimir Putin. So, yeah, that's a conversation we'll be having. Jackson Hole, we just talked about that too. To what extent we should be further leaning into rate cut expectations now that we still have a lot of data points, of course, on the deck before what is it now, 18. In fact, this time next month exactly to the day is when the Fed meeting is going to take place.
Yeah, and then how much is Jay Powell going to really settle the speculation, as BE says.
Endorse it without promising
Endorse it without promising it. When the data seems to be showing different signals, right? When you talk about the U.S. inflation print, which basically turbocharged that whole September cut bet, but then PPI prices were firmer, and quickly people were recalibrating a little bit already. So, it's really data driven right now.
It is. In fact, I'm going to give a shout out to Mark Cudmore, our colleague out of Singapore. I think he had a fantastic piece on Friday, and he talked about how we are in fact headed for a higher inflation world. You look at the components of the CPI report that came out. You look at the hot PPI print, which came out last week, and it's something that the markets haven't fully wrapped their head around, but the trend has been clear that inflation in non-tariff components are starting to wake up. And how will Jay Powell frame that amidst the sort of dual mandate there? Of course. Right. That's just to say, there's a lot of risk on the table, including, of course, what is still to take place in the White House later today. In fact, let's get a preview of that meeting. Jill Deeses, our news desk editor, is here with us to help contextualize, of course, this upcoming conversation at the Oval Office.
Yeah, I think, there's a lot of different factors that are really in play here, right, as we've been discussing. First of all, there's this idea of what exactly does a U.S. security guarantee look like, particularly in light of this meeting. What does it mean to potentially give Ukraine some kind of NATO-esque protections without actually, adding Ukraine as a member to NATO? I think that's a huge part of this that is unclear, as are obviously these territorial concerns that we've been discussing. Certainly Putin wants some kind of territorial concessions. Zelensky has said it's not on the table. I think the other piece of this that's also really critical here is, what we've heard, Trump kind of given a call to leaders over the weekend is this idea that he would like a Putin-Zelensky meeting to happen within a week's time or so. So certainly, I think, in addition to the lack of clarity around what exactly those security and territorial issues ultimately look like, you're also potentially racing against the clock when you've got Trump, who, first of all, is frustrated by the fact that so far, he's been unable to reach a peace deal between Russia and Ukraine, something that he really wanted to kind of get done, really day one in office as president again. And now you've got him trying to sort of speed up that timeline and try to get something, over the line as soon as possible while we're still dealing with this very complex situation.
There's a very interesting story from the BN side about Trump's peace deal demands leave Zelensky with only bad options. How should he approach this meeting later on today in the Oval Office and avoid what happened 6 months ago?
Yes, well, I think, first of all, going into this Oval Office meeting, he does have quite a lot of allies with him this time around. So, I don't think we're likely to see the optics that we did earlier this year when you had Trump and his Vice President J.D. Vance kind of, ganging up and kind of pushing back against Zelensky. So you do have quite a bit of the European Union that's going to come alongside. At this point, I think, one thing that they're ultimately looking to get out of this meeting is more clarity on what exactly these security guarantees from the United States would look like. Because if, Trump is in this meeting with Putin and is trying to work towards some kind of a deal, the last thing that you ultimately want if you're Zelensky is some kind of, vague security guarantee that maybe means in a year's time or so, Putin is empowered to restart a war or, try to, ultimately, take more territory. So I think that, for Zelensky, for the rest of the EU, any kind of clarity over what exactly would, they could ultimately get comfortable with in terms of a peace deal is what you really want to get out of this meeting. But again, I think, it certainly at this point feels pretty high stakes, I think, going into Monday for Zelensky.
Okay, well, we know what we're going to be talking about tomorrow. We don't know the topic. We don't know, of course, what the takeaways will be. Jill, thank you so much for setting that up for us. Jill Deeses there, our news desk editor. Some big movers about 40 minutes into the session. We'll leave you with a look at this. JD.com, NetEase, JD Health, and Lenovo are your big movers to the upside. Hang Seng Index is better by over 1%. So we're looking at that, and certainly there we go. Big move across the tech space as well. Big move in insurers, big move in banks, and really underscores this rally that is literally gaining momentum in the last minutes or so.
It's pretty surprising, just given what we've been seeing and why we're seeing this sort of ferocious sort of momentum here after that data dump. I thought it was going to be quite a sore spot. I was off on Friday, but yeah. It's like it never happened. Coming up this hour, we're looking at this disconnect, right? Mind the gap is what BofA calls it here right now between what's going on in economies and markets. We have Jason Lloyd from Paribas joining in that conversation as well, and what to do now in this divergence.
Yeah, but ahead of that, it's also earnings season in Oz, and the group CEO and MD at Lendlease will be joining us in a couple of minutes here. So there's this ongoing restructuring, repivoting, refocusing of its assets. We'll get an update on that, and of course what went well, what didn't go well as far as the company goes, and what the outlook looks like as far as the turnaround plan is concerned. Stay tuned for that and more. This is The China Show.
All right, checking Lendlease shares in Australia here right now. There you go. We're up some 5% on the back of what we heard in the earnings. So returning to profit, also increasing payout for its shareholders. But then again, net income still did miss estimates. But really, it's a sign that maybe they're starting to see some of the benefits of this turnaround plan of basically unwinding a myriad of projects outside of Australia, whether it's UK, US, and Asia as well. Let's bring in the group CEO and MD, Tony Lombardo. He says the results reflect progress in simplifying the group and refocusing its capabilities to drive long-term value. He joins us live from Sydney now. Tony, it's great to have you. So this capital recycling plan is obviously the cornerstone of your business strategy here right now. Tell us where you are right now in terms of your divestments, and maybe tell us a bit more about, how things are so far.
Yeah, like on the turnaround strategy, there were three key elements, and we did some $2.5 billion of announced and completed transactions at or above book, so that was very pleasing. We exited all of our international construction operations in the last 12 months, which has changed the risk profile of the group. And then finally, we set ourselves a target there to reduce costs by some $125 million during this financial year, which we exceeded that, delivering a result of 141 of cost savings, which has allowed the group to then focus on our go-forward business of investments, development, construction. We've seen those segments, our EBITDA up some 49% for the period, and we saw our operating profit coming at $386 million across those three key components, and we've seen a return on that part of our capital jumping to 13.6%. So pleasingly, simplification going well, business starting to turn, and then we've won a number of new growth initiatives. So we've won a couple of new investment mandates in our investment business for $1.5 billion for MPS and QuAP, two key capital partners for the group going forward. We've secured some $3 billion in new development projects, the last two in partnership with Mitsubishi Estates Asia and also with NSKRE, who's a key partner out of Japan. And our construction book has grown by some $5 billion of new work secured in the last 12 months. And that's in key sectors of data centres, defence, which is a big area and customer we serve, and then social infrastructure. So we're starting to see a real uptick in growth on a couple of our real fundamental parts of the business going forward.
Tony, David here. Just to also maybe follow up on one of the points you just made, are there any other sort of major divestments still in the pipeline that you'd want to see?
Yeah, we've flagged another $2 billion of capital recycling that the group will undertake over the next 12 months. They're key things. In Malaysia, we completed the TRX asset, which is a retail office asset. We'll now look to bring in capital partners, so we're exclusive with someone on that. So it's something we'll anticipate to get done in this first half. We have our retirement living co-investment that we've had on the market. We've got a live process with 3 or 4 bidders in that process, so we expect that to be well and truly known. Those two things alone is another $1 billion, and then there's other parts of the program that we're looking to divest out of different assets around the globe that we're working through those strategies at the moment.
Has there been any sort of hold-up in in why you haven't been able to sell those remaining assets? I'm just wondering, are there still kind of key headwinds or primary challenges in really divesting your assets now?
No, Yvonne, we targeted 2.8 billion of assets. We announced 2.5. A few things have slipped just based on timing, but good momentum with good appetite and interest from respective partners. Like, we are exclusive on the Malaysian asset. We have 3 or 4 bidders, so it's really a timing thing. I just think in today's environment, transactions are taking a little bit longer, but we've well and truly made significant progress on what we were planning. We set out to do 4.5 billion over 4 years initially, where hopefully we'll be able to do that within 24 months. So from that perspective, that's great. And the cost side of things beat target. And the international construction, we thought it was 18 months. We've managed to do that with under 12 months.
And it's, I think part of the restructuring process has really simplified, let me just simplify the language, improved your financial health, right? Gearing has come down as well. I want to understand as well, I mean, the group has, correct me if I'm wrong, Tony, has indicated that it plans a share buyback. Is there any update on that? Where is the board as far as that corporate action is concerned?
Yeah, David, that's something that's definitely on the cards. We had set ourselves some criteria to make sure, firstly, we had substantially covered that $2.8 billion of capital recycling, which we're very close to doing. Plus, we wanted to see our forecast gearing for this financial year get back at 15%, so at or below by the end of the financial year. I think once we got that confidence in the next few months, we're sort of imminently away from announcing that buyback. So it's staying very focused and completing what we need to do on the simplification.
The RBA has begun cutting rates. I mean, mind you, it's a gradual sort of easing cycle, but does that change how you do business? Would you be more inclined to speed up your asset sales in Australia, Tony?
Yeah, I think the great thing about rates coming down, it's just giving investors that confidence that from a property cycle, we've hit the bottom. So definitely the capital interest coming back into the market has been a lot stronger. We've seen investors come into things like our GEM office in our global REIT in Singapore just sold at book value. We brought 2 new investors in, Sitetsu and Yasuda, into a UK asset, and we're definitely seeing an uptick of interest in a number of the things we're doing in Australia, in particular with capital partners. And so I just think there's a level of appetite that now everyone feels we're bottomed, and if anything, we're starting to see a bit of uptick in the real estate cycle from this point onwards.
Tony, I guess just the message that markets have been getting because of the sort of restructuring and repivoting of the business we've had since, I think, over 12 months back. When do you think the framing needs to be more in growth than cost savings? Do you think we've turned that page, Tony?
Yeah, no, I think we've definitely turned the page, David, this period. Calling out $1.5 billion in new investment mandates. We've also got raised capital investments of some $2 billion to deploy in strategies in data centres and other value-add opportunities, plus the new QUAP mandate I've called out. We're in the process of raising another $3 billion to support strategies in credit across Australia and US, across value-add opportunities that sit across Australia and Japan. So very active in the investment space. We've bid on some $25 billion worth of new developments here in Australia. A number of those things we'll start to hear back. In particular, in Queensland, in Australia, we've been selected to deliver our site, the Athletes Village, for the Olympic Games in 2032. So we're in negotiations with government on what that looks like as a transaction. And then in Sydney, we're very close to hearing on another office tower, which has got about a $2 billion end value. So gaining momentum. And then the construction side, the $5 billion of new work secure, but we've got preferred work of some $8.8 billion in our construction pipeline. So I'd expect our revenues in construction to tick up from their low point this year of $3 billion in the medium term, heading back to $5 billion. So we're simplifying, but we're really starting to focus on that pivot back into growth across our key 3 businesses of investment management, development, and construction.
Yeah, you mentioned a few on how you're restocking your project pipeline in Australia right now. What is going to be the key strategy in terms of funding those opportunities while also deleveraging the balance sheet?
Yeah, the business made a pivot in our business model to ensure that we bring in joint ventures to partner with us at inception or close to inception of securing those projects. So when we look at our development book, we have globally some $80 billion of developments. There are some that we're looking to divest, but the core book is going to be sitting at some $65 billion. Of that, 85% are now in joint ventures with our key capital partners around the world. So that's just helping us reduce the amount of capital that we need to put on balance sheet. It supports generation of development management fees and other fee streams as we execute those projects. So the business model in development has pivoted, and it's moved away from on-balance sheet development to joint venture partnerships, and with a large portion of the group's developments now in joint ventures, some 85%, as I stated.
Tony, anything else we missed? What do you think? It's a fairly long statement. I tried to print out the whole statement, but I also care about the environment. So, yeah, help us understand what we didn't touch on there.
Look, I think you've covered, David, the critical components, but I think from here on in the next 12 months is complete the asset sale program, which will deliver another $2 billion of capital back for the group. That will continue to strengthen the balance sheet. It's then redeploying that capital into our investments, development, and construction. And I think a restocking of the development book through the next 12 to 24 months by adding over $10 to $15 billion in new developments will start to show the profile of earnings moving into 27 and onwards, and we're feeling quite strong with $4.4 billion of developments now completing at One Circular Quay in our Vic Harbour project in Australia. And in Singapore, we have ComCentre, which is our big development, where Singtel is the cornerstone tenant for 33% completing into FY28. So we're starting to now see that execution and that profile of future earnings coming through.
Tony, it's great to have you. Thanks for joining us. Lendlease Group CEO and MD Tony Lombardo there. We're going to get some lines crossing here on now a confirmation of when President Trump is going to be meeting with Volodymyr Zelenskiy as well as European leaders. So 1:15 p.m. Eastern time on Monday is when he meets with Zelenskiy. So they have about a 2 hour, 1 hour 45 hour meeting. Then they're going to meet with the European leaders at 3 p.m. as well. So that's confirmed. Plenty more ahead. This is Bloomberg.
Right, welcome back. Pulse check. The markets were doing very well on the equity markets, particularly here in Hong Kong and up in mainland China. In fact, at 37.21, we're now at the highest level in 10 years on the Shanghai Composite. Weather-wise, though, we're not doing too well here in Hong Kong, where we still have it's an amber rainstorm warning that's up over the city. So, an update of the weather and the market weather coming up next as well.
$11:29 a.m. in Tokyo. Japanese markets a lot nicer than what we're seeing in Hong Kong here this morning. We're just heading to that lunch break. And yes, equity markets are doing very well. In Japan, we're up about 0.8% here. The Topix is also up 17 points. Yen is weaker on that front as well. But yes, we got to get our minds wrapped around again, Dave. 20-year bond auction in Japan.
Oh, no.
Happening on Tuesday. Yeah.
Yeah, it's flashbacks of not very good things, right? So we've had two of that already today, right? 20-year bond auction. Thank you for reminding me of that. And of course, the other big story is Volodymyr Zelenskiy is heading to the White House, and of course, we have certainly memories of what happened the last time that happened 6 months ago, and we have now timings for that, right? So in case you missed that, I think it's 1:30 a.m. if you're watching out of Hong Kong, and it's 3 a.m., which then goes into the European leaders meeting. Anyway, back to the here and now. Shanghai Composite, in the last 10 minutes or so, has took out the high that we hit back in 2021. So we're now at a level, frankly, since Yvonne and I just started at Bloomberg about 10 years ago or something, right? When we were still bright-eyed and not
sleep deprived.
Not sleep deprived. We were not as cynical. But yeah, that just gives you some context of how far we've actually come. There we go. Right. Turnover. One other thing we're tracking today, so 3 straight days of $2 trillion turnover onshore, Wednesday, Thursday, and Friday. And in the first hour of trade, we've already taken out the $1 trillion level as far as onshore markets go. And not to even mention separately, the southbound flow is coming in, right? Record amount of purchases over the southbound connect on Friday. I think 36 if I'm not mistaken, yeah, which is about 85% of the quota. But yeah, certainly it's this reawakening of the market, Yvonne.
Yeah, quite surprising, just given how bad that data was really on Friday, right? So a lot of economists have been talking about this as well. I think they're fielding a lot of questions from clients about what the heck's going on. I mean, I'm talking about weak fundamentals, but equity markets are on fire here. Helen Qiao came up with a great report about the great divergence, right? A common theme was a stark divergence between weak macroeconomic fundamentals and improving equity market performance. But this is what they found out, right? Can it continue? They still agree momentum will weaken in terms of the economy in the second half. You have negative payback from front-load exports alike. But there is one underlying thing that is keeping this equity market going, perhaps in the near term, which is liquidity. Right, so that certainly is the key thing that's driving things here right now. Let's dig into this a little bit deeper here. We've brought in Helen Qiao, also from BofA Global Research, Chief Greater China Economist, also Jason Lloyd from BNP Paribas, Head of APAC Equity and Derivative Strategy at BNP Paribas. He always talks about flows. We're going to talk about Helen first. Tell us a bit more about this dichotomy, and why do you think weak fundamentals are not bearish for the market right now?
Well, I think the market is probably looking through the fundamentals at the moment because of the support, as you said, Yvonne, that the liquidity has been pretty abundant. And at the same time, some of the things that the market was expecting previously, such as on the trade war front, is actually happening better than they originally expected. So I think they are looking over the current weak patch of the economy and probably thinking beyond that term. That said, I have to say that the current economic state is not necessarily at the extremely healthy one. We are seeing, especially last week, for example, money and credit data already showed that there is a general lack of confidence in investment as well as in consumption. If you look at the retail sales numbers as well as fixed asset investment numbers, both are pretty weak. So IP was okay, mainly because that the export growth was fine for now, but we don't know for how long, right? Because of such uncertainty in such a trade environment. So overall speaking, the economy is not in a great state, but investors are more than happy to look beyond that. Well, this is one of the few times that you probably do not necessarily see the fundamentals and the market go hand in hand, and that happens from time to time.
Jason, does the rally make sense to you?
I think both of you and also Helen brought up some very good points. So if we go back to Yvonne's point earlier about it's all about liquidity and something that Helen mentioned, when we think about liquidity, there are two parts to it, the quantity and the cost. When we look at the cost, the interest rate situation in China has already come down quite a lot. And when we talk about the quantity, I think recently there's an article suggesting that the Chinese household saving has exceeded 160 trillion renminbi. So you have low cost and a lot of quantity to invest, which is something that is quite unusual. Because if you go back to your earlier point, David, when you go back to 10 years ago, where Shanghai Composite where it is, the interest rate environment is also very different. So for a lot of domestic households, when they look at 10-year government bond at 1.6, 1.7%, and then all of a sudden, the large cap companies giving you almost 3% yield. From an income generation perspective, the Chinese domestic equity is actually a very appealing alternative.
Yeah.
Yeah.
Well, I was going to ask you, Helen, actually, is the fact that the market's doing well, is that actually almost a sign that there's just really no other good alternative economic asset for consumers to put their money in at the moment? In other words, instead of leaving it at the bank, I'm going to put it in the market. Instead of buying property, I'm going to put it in the market.
Well, there could be some element of that, but David, I'm not trying to reconcile the difference between the market and the fundamentals,
right,
which historically, I don't necessarily think that they always go hand in hand, as we said. But that said, I would say that indeed there is a general lack of confidence in terms of investment, and for example, investing in property or other type of assets. But that said, if you were saying that if people completely have no confidence in investing in anything, then would necessarily this equity market would be the only option, or they would rather hold on to all this cash?
Yeah.
So in an extremely deflationary environment, I would say that people would probably find it difficult to even put more money into the market. Even at a time when, as Jason was saying, that when the government bond is offering very little, they may be too afraid to put it into any of the equity market. So that probably implies that there are structural opportunities in certain pockets where people see much higher certainty and therefore higher probabilities of getting better profitability in the future. So they are looking beyond the short-term volatility.
It seems like after that data dump on Friday, though, people have actually reinvigorated their bets that we need more stimulus. Are we likely going to get large stimulus, or is it going to become a drip feed of what we've been seeing so far?
Well, that's a very good question, Yvonne. But in our view, at the moment, the bar is still pretty high. The reason is that while the data from June to July is solid, it kept going down. However, is it as bad as it urgently calls for something immediate? Maybe not. And also, in our view, we think policymakers are still relatively comfortable with the current state of the economy, especially after a pretty strong second quarter. So first half being 5.3%, second quarter being 5.2 alone, were definitely a beat relative to the expectation everybody had at the beginning of the year. So, while the incremental news from monthly data is telling us that things are getting worse, we don't necessarily think that changes the mentality at the very top to introduce much more stimulus at the point. So we were lucky to see, the interest subsidy that came out last week. We think this is in a way to kind of like, comfort the market before the bad data hit. However, would that be sufficient in terms of revigorating the whole economy and reversing the CPI and PPI deflationary trend? We don't think that will be enough, although it's a good start.
And Jason, one of the big drivers of this equity market, particularly onshore, have been this long dividends and long banks. Do you think that continues? And does that make sense given the economic reality still?
Sure. I think Helen brought up a term about confidence, and this is something that historically the China-Asia market is quite volatile. Right? We've seen a lot of boom-bust cycle in the equity market over the years. And since last year, what has changed is that we've now seen the government getting involved in the equity market by ETF. And if you look at year-to-date, the volatility of the China onshore market, let's say CSI 300, for example, is actually lower than S&P 500. So it's starting to create this kind of confidence-building process. It's going to take time. I don't think the onshore investors are fully believing in the market will continue to rally without seeing some improvement on growth. But when we think about equity market, there are two parts to it. There's the earnings growth part and there's the income generation part. So when you are struggling to get any income generation from other products, receiving roughly 3% cash flow from that process while waiting for the government policy to come in and translate through earnings, it's a more appealing process. And so that's why when investors look at these different themes, to Helen mentioned about different pockets, the so-called low volatility, high dividend investment theme, it's a nice way to carry them through until they see more specific policies being implemented.
Okay, where are funds and flows are showing you in terms of where things can be sustainable? I mean, the beginning of the year was H share. It seems like A shares are now catching up. A or H, what do you prefer?
I think those are two very separate investment stories because of the market structure is very different.
Yeah.
If you look back at the Q1, right, it's all about the DeepSeek generated excitement around technology, and that's where the Hong Kong market tends to shine because a lot of your large internet companies are in Hong Kong, and that seems to be going through a different process at the moment. But in turn, when some of the anti-involution policies start to come out, this is where the onshore market is better suited because there's a lot of traditional industry still being listed there. So I think we are now in this kind of transition period that for investor who wants to position for anti-involution, it seems that they're willing to put more money into the onshore market. But for those of them who are more into the AI-related stuff, then I think Hong Kong still offers something different. So this year, I think investors can actually find ample opportunity set if they're willing to go down into sector or thematic levels.
Very good point that Jason brought up, right? The state funds and ETFs, and I wonder, Helen, do you think the equity market is, although not directly, part of the policy cocktail of the government to reflate, let's say, reflate confidence?
I think it is part of that mix in terms of objective functions for the government. At least if you think about CSRC, I'm sure that they would love to see A share going up rather than going down. Right. But that said, I don't necessarily think that they have a numerical target to go to a certain level. I think the objective is actually to keep it stable and hopefully slightly up. But as long as it slowly gets a certain point, it is okay either way. So I don't necessarily think that policymakers wouldn't care about the stock market market, and even if it tanks, it's not part of their thing to watch. That's not true. I think policymakers in Beijing watch very closely as well. However, do I think that the entire market performance was due to the 国家队, right, the national team's help? Probably not. I think that still was based on what Jason was saying, the DeepSeek moment at the very beginning and the earnings improvement later on. So I think that still has to come from the fundamentals. Well, that said, that also implies one thing, which is going to the second half, if we continue to beat the expectations of investors on company earnings as well as macro fundamentals, then we stay here. And the uncertainty, however, is that do we still keep the trade environment at a relatively stable environment? And at the same time, do we see domestic demand staying relatively stable? Or at this moment, money and credit data, which are leading indicators, are telling us that things are not looking that good.
What does the fourth quarter look like to you then? There's still a lot of debate about what exports are going to look like, what sort of payback we're going to see, if any. What's your take?
We think Q3, Q4 are probably going to do okay, but not as well as in Q1 and Q2. Obviously, we're going to have a higher first half and a lower second half. But Q3 probably has slightly more uncertainty compared to Q4. Okay. This is because that we may see some payback of the front-loaded export orders. You have bought a lot, in advance, and probably this is a time to destock a little bit. And we also see the potential challenge, for example, coming from the investment slowdown. You saw the numbers from the negative year-on-year numbers from fixed asset investment in July. This was not the first time it blinked in red, right? The June numbers was at 0.5% for headline, and both infrastructure as well as manufacturing investment growth numbers, which used to be the most important driver for FAI growth, were actually now down pretty notably. So we are seeing some downward momentum, and we do think that more policy easing is warranted, but we think that the timing of that coming out may still be probably more postponed into late September and probably October.
Jason, what do you make of the earnings season so far? And what does it tell you about where the economy goes, particularly guidance from companies?
Sure. I think so far what we have seen is a little bit more kind of divergence, right? When you look at how the earnings estimate has evolved, especially this year, we've seen a fairly concentration of the earnings optimism concentrated around technology-related stocks, probably for a good reason, especially after the DeepSeek movement. But for the past few weeks, as we see companies listed in Hong Kong start to report, we also start to see some divergence picture, even within some kind of technology-related stocks, right? We have, if you're a media entertainment companies, your earnings seems to be quite good. But if you're e-commerce, then there's some uncertainty regarding this intense competition when it comes to food delivery and instant retail. How much would it impact the bottom line? So I think even within the technology space, I think we may need another quarter or so to fully understand the short-term and the long-term impact of some of those competition happening in the e-commerce space.
All right, great stuff. Thank you so much. Jason Lloyd from BNP Paribas, Helen Qiao from Chief Greater China Economist of BofA Global Research, joining us there for a great discussion. We're going to get some lines here right now. This is according to Vladimir Zelenskiy. So the Ukrainian leader is now confirmed. He says, I have already arrived in Washington. Why are we showing the Thai baht? Okay, let's talk about GDP numbers first. Yeah. 2.8% for year-on-year numbers for growth. That is beating expectations.
Just in case.
GDP for quarter-on-quarter also beating expectations there from Thailand.
Okay, back to the announcement. Yes, so Vladimir Zelenskiy just put a statement out on X. You can read about that there. I have already arrived in Washington. Tomorrow, of course, I am meeting with President Trump. We're also speaking with European leaders. And, of course, I think about 20 minutes back, we didn't get specific timings on when those meetings would be taking.
1:15 p.m. Eastern time for Zelensky. And then the European leaders all gather after that, 3 p.m. So.
Okay. We know where the top story will be this time tomorrow. Right, a lot of breaking news. We'll get you more coming up. Of course, we'll take a short break and a full market roundup coming through as well. This market is rallying quite hard this Monday morning. Plenty more ahead.
All right, take a look at some world news this morning. China is escalating its trade fight with Canada, filing a WTO complaint over Ottawa's steel tariffs and quotas. Beijing calls the measures typical trade protectionism after also slapping duties on Canadian canola. Tensions have grown since Canada moved against Chinese steel, aluminum, and electric vehicles. Ottawa says it's protecting domestic producers hurt by U.S. tariffs. China's top diplomat Wang Yi heads to India on Monday for his first trip there in more than 3 years. He's set to meet with Prime Minister Narendra Modi on Tuesday. The 3-day visit comes as Beijing works to ease long-standing tensions with India amid President Trump's global trade overhaul.
Okay, well, really on that story, we've seen markets already reward a lot of these Indian firms that have links to businesses, or at least a footprint within the sort of China ecosystem. In fact, we might even see a further resurgence as far as that's concerned, thanks to what we were just pointing out there, the backdrop of thawing relations between the two sides. For more really on this trade, what's taking place, and can it actually continue? Abhishek Vishnoy, our senior Asia equities reporter, is here to talk us through this. Yeah, and Abhi, we've already seen markets get ahead of this. Can it continue, I guess, is the question.
I think it should continue. I mean, what we are getting from our reporting is that these companies have started moving as this thaw in relations between India and China are becoming more and more public now. It's not essentially a new theme. Even before Trump actually imposed or threatened to impose these huge tariffs on India, there were a lot of companies which were doing JVs or partnership with Chinese companies. There were a lot of companies which had investments from Chinese-backed big funds or big companies. So this theme was slowly taking shape. Just that at the policy level, there were still some ifs and buts that whether government actually is going to follow its word on attracting more Chinese investments or getting a bit more comfortable in terms of Chinese inputs. But now, given both the countries have been pushed into a corner, India more so now, given the tariff threats, both are coming together, and it's a theme which will continue. I mean, despite the skirmish in 2020 at the border between India and China, China and US are almost sort of an equal level partner as far as total trade is concerned for India, and economists wouldn't see this as something impossible that China becomes a bigger trading partner or biggest trading partner for India. Having said that, this is just a set of companies. It's a set of companies, a group of companies in an otherwise underperforming market. So it's a tailwind for those companies only. It's not a tailwind for the market yet.
Abhishek, another story that you're tracking is Modi is now saying India could cut the consumption taxes in a way to spur growth. Is that going to be a potential tailwind for equities?
Absolutely, that's a way bigger trigger for Indian markets, and it feeds right into the most important thing which has been dragging India's performance, which is earnings growth. Now, I think the economy is still made up of 60% of consumption for India. Urban consumption was a bit slower than the rural one, and these tax cuts or tax rationalization are directly going to feed into consumer durables, consumer staples, consumer discretionary. So that has been India's strength. When everybody was looking for a consumption bet, let's say a decade ago. So it's sort of doubling down on that. And if you look, I mean, there's a lot of excitement around automakers, cement producers, electrical goods makers. So it's India being pushed on the wall, towards the wall in the wake of US tariffs and other global turbulences. There is a lot of reform that is coming in. And, this is also in line with what the RBI has been doing. So if you now look at what the government and RBI is doing, the two biggest source of liquidity in economic system, central bank as well as government, are now turning very positive. Central bank has been cutting rates. It has been promising that if the inflation, which is already come below its comfort level, there is room for more easing, and government is also following through on on a wide array of reforms, and including the most latest one. So this can actually, give some comfort to foreign money which has been leaving the shores in wake of a sort of anemic earnings growth and high valuations. And if you think about in the valuations context, valuations are actually at a 5-year average for India. So this actually would probably lead to an absolute positive return by the end of this year, most likely.
Perhaps why we're seeing India futures up some 1.5% here this morning. Abhishek, thank you. Our senior Asia equities reporter, Abhishek Vishnoy. We got plenty more ahead. This is Bloomberg. Cue the humanoid robots. Yeah, you gotta show it, man. Of course, Unitree Robotics is behind all some of these machines and really grabbed the spotlight at the World Humanoid Robot Games in China over the weekend. So the H1 robot won gold in the 1,500-meter race with a listed time of 6 minutes and 35 seconds. That's not them, though. That's them playing soccer. But the 3-day event hosted in Beijing was the latest showcase for challengers to Tesla and other U.S. companies. And, of course, in this emerging field of advanced robotics, of course, you got to have a whole games around it, right?
Yeah,
they play the drums, too.
They do. On your mark, get set, then lock and pop. Right?
Bloomberg Tech Asia back this week with focus, of course, all on humanoid robots, 8:30 a.m. Hong Kong time.
Yeah, catch it, of course, with Bell and Sherry coming through. In fact, just one group of cohort of stocks we're tracking on the back of that are some of these robotic-related names in China coming up on your screens very shortly. There's that. There's Hua Hong Semi, which is down on the back of this stake purchase. PopMart is also doing well. That's an earnings story that's coming through this week. And, of course, the other bit is the milestones we're hitting as far as the Shanghai Composite and other mainland benchmarks are concerned. We're nearing $1.5 trillion now in turnover, about 90 minutes into the session. And, of course, Shanghai Comp is now on track to close at the highest level in 10 years. This is the China Show.